Hello traders and welcome to another video review. Today is Tuesday, May 7th, 2024. Let's find out what do we have in economic calendar for today. One of the most important data released overnight was the RBA interest rate decision, and the Reserve Bank of Australia decided to hold the interest rate at the same level of 4.35. Together with the interest rate decision, RBA monetary policy statement and the rate statement had been released as well. Moreover, retail sales data from Australia are deepening from 0.2% to minus 0.4%. During the London session, we got the unemployment rate data from the Switzerland, which goes down from 2.4% to 2.3%. We got the data from the UK. Halifax price index increases from minus 0.9% to 0.1%. The German factory orders increase from minus 0.8% to 0.4%, but it's way worse than the expectations of 0.4%. So it's still but it's still better than better data than the last time, but lower than expected. French non-farm payrolls better than expected, 0.2% versus the 0% forecast. We are still waiting for the S&P construction PMI data from the UK, which is scheduled for release at 10:30. At 11 o'clock, Eurogroup meeting starts, and retail sales from the Eurozone is scheduled for the release. Global dairy price index from the New Zealand is scheduled for release at 2 o'clock. And then we got the data from Canada, IV PMI. Is scheduled for release at 4 o'clock. At 5:30, we got the FOMC member Kashkari to give a speech. And at 6 o'clock, we got the short-term energy outlook. Free note auction from the US is scheduled for release at 7 o'clock, together with the German Buba president Nagel to give a speech. 9:30, we got a speech from the Bank of Canada Deputy Senior Governor Rogers. And at the end of the day, API weekly crude oil stock data are scheduled for release. And this time it is 10:30. Because of the RBA interest rate decision overnight, let's start our technical part with the review of the Australian dollar. The 4-hour chart of the Australian dollar is showing rejection of the technical resistance at 0.6651, so 6061 pips. You can see that this level has been tested many times, and it's just below the key technical resistance. So we got a couple of lines here that we might say they are valid for this technical analysis. So you got this highs here. This one is here, and if I'm not wrong, there you go. Yes, this is the zone that is very, very important for the bulls, because they need to break above this zone. Let me just give you guys the better view of this zone. So let me just fill it up in red, because of course it is supply zone. So this is the reason why we are looking at this zone, and as you can see, if we zoom in, we can straight on say that it was tested not that long ago, May 3rd. It was rejected, then it was another attempt, and bearish engulfing pattern for the second time says it is definitely rejected, and the market is coming off the extremely overbought conditions on the 4-hour chart. We are breaking below the 50 periods moving average, so the next immediate technical support is located at 6,589, and we just tested it. And if we break below this level, then the 200 periods moving average at 6,537 around this level is located. So that will be that might be tested as well. Any line that we would like to apply for this chart would be this one, and this should show us a potential technical support, dynamic technical support in form of the very weak trend line, because we bounce only once from this trend line. From the Elliott wave point of view, again we got this ABC corrective pattern to the upside. So from the lows of 6,365, we go towards the highs of the wave A, 6,589. Then we go down as a counter trend correction, wave B, 6,468, and then it looks like the wave C had been completed at 6,651 pips. So free wave pattern is always a corrective pattern, and if we break below the highs of the wave A, which is of course 6,589, then we got the confirmation that this is the corrective pattern and that has been completed and the market is going lower. And the reason is because of the Elliott wave rule. If that would be wave 1, wave 2, that cannot be wave 3 because it's very small. But if it was the wave 3, wave 4 cannot overlap wave 1. So we're going down on the momentum, we're going down on the chart. There's room to the downside, there's room to the downside. Please be careful because it looks like the Australian dollar might be going lower. If we speak about the Australian dollar, let me just take a look at the New Zealand dollar. What was that? I have actually no idea. Low at 4,725, high at 5,946. Looks like a one big, maybe central bank intervention, maybe something else. To be honest with you guys, I got no clue. So let me just go to lower time frame because we need to get, oh no, we will not get rid of this as long as we can see it. There you go. So on a 1 hour time frame chart, so super short if you know me, we got this very interesting line here. Oh, very nice line. Let me just make it of course orange, and there you go, so you can see it. It looks like the market wants to go higher, but we were capped somewhere around this level here, 6,043 pips. So that would be our technical resistance, and the lower level of the technical resistance, 6,027. Immediate technical support is the low of the range, 5,990. So the market is now approaching this level. If we break below this level, then there's strong support roughly around where is my, I just want my arrow so I can show you guys, roughly around this level, let's say. So that's 5,970, right? So we got 200 periods moving average on a 1 hour time frame chart, and we got this trend line. Momentum wise, we are going down. We are going down with the momentum, and that basically supports our view. So as you can see, the market should be going down, momentum should be going down. We are now at the level of 45, so we crossed the neutral level of 50. We used to bounce from it, but now we cross it, and there is a room to the downside to move lower. There is a room to the downside here on the momentum to move lower as well. So the New Zealand dollar might be coming down as well. Let's just take a look at the US dollar to the Canadian dollar. This time we are going to switch to 4 hour chart to see what is going on here, and I can see straight on very nice bullish engulfing pattern. Let me just zoom in a little bit here to see to show you guys this situation. So what do we have here is of course the bullish engulfing pattern from the lows of 1.3609. so that's the technical support, and we are at the level of 1.3631 we got another technical support. So very nice bounce from this level. Moreover, that level was extremely oversold, so you can see that we go from the extremely overbought market conditions, which is here at 1.3781, right? We go from here to here, and on the momentum from the extremely overbought to extremely oversold. Now we are bouncing and trying to challenge the level of 50. Let me just mark the level of 50 so everyone can see. There you go. We are now trying to challenge the level of 50. If we break above the level of 50, and then if we break above the 50 and 100 periods moving average on a 4 hour chart, which are roughly around 1.368386, then we are ready to break above the immediate technical resistance at 1.3702 and then move higher towards the last swing high. So please keep an eye on this situation here. It looks like a good opportunity for the bulls to extend the gains, but they need to gather more momentum. They need to break into the positive territory. They need to break above this zone here in order to test the last swing high at 1.3775. And last but not least, of course, we are looking at the Bitcoin. What is Bitcoin doing is quite interesting here, because we've bounced very, very extensively from 56,480 from the extremely oversold market conditions. We broke back above the key demand zone. We broke above the 50 and 100 periods moving average. We've been testing it, and the local high was made at 65,539 before the bearish engulfing pattern had been made. Now we've tested the 62,924 lows, and we're still bouncing from it. If we just zoom in a little bit, you can see this long down shadows. So the momentum is still positive, but it went down, of course, from the extremely overbought conditions. But it's still positive. It's not that strong, but it's positive, and the bulls are trying to remain in control of this market. So any violation of now, it looks like this is not the correct level, because we got the newest data. So any violation of 65,278 would likely open the road towards the highs from the April 23rd at 67,228 and test it. So that's the next target for the bulls, as long as we stay above 50 periods moving average and today's let's say technical support at 62,915. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.